Welcome to the Capital News. I'm your host, Alex Karitis. Today is Thursday, October 1st, 2020. Thank you so much for joining me. The title of today's podcast is To Bail Out or Not to Bail Out. It's amazing that it's already Thursday. I say that pretty much every Thursday, how quickly these weeks are rolling on by. And of course, it's October 1st, the first day of the fourth quarter already. You're going to be hearing Christmas music before you know it. It's insane, but we're already in the fourth quarter. So we're not going to talk too much about politics, especially not the sideshow that was the disaster earlier this week. We had that discussion. We discussed yesterday a little bit about the Electoral College, some of that math. Anybody's ball game, but definitely a more uphill battle for Donald Trump and company. And we will provide further analysis on that as we make our way through the election season over the coming month. So market performance today, initial jobless claims data, the Federal Reserve's balance sheet, M2 money stock is on the agenda today. The spending bill is still up for grabs, still no concrete deal between the Democrats and the Republicans / the White House, but stand by, something might be coming through. It's minute by minute, hour by hour, phone call by phone call, and of course the markets just eat it up because there might be something coming. I mean, this is just simply reminiscent of all of the vaccine headline BS that we get on a near daily basis. It was the same BS that we used to get with the U.S.-China trade deal. I mean, they really take us for idiots. They really do. But you know what? People keep falling for it, so why not keep doing it? I mean, why actually have a deal if your desired effect is to really juice the markets? Screw small businesses. Screw the families who are in desperate need. Screw that. We just need the Dow Jones Industrial Average and the NASDAQ to keep grinding higher. And the algos, the algorithms, they just need the fancy headlines. That's all we need. Now, of course, you know me. The audience knows me. Unless, of course, you're new to the audience. I'm against all these bailouts. But if you're going to bail out major corporations, if you're going to buy the corporate debt of the largest corporations, not only in this country, but globally, well, then, yeah, you have to do it for everybody. I mean, you want to talk about equality? Well, my goodness. And we have some more staggering numbers to get through because to bail out or not to bail out, that, of course, is targeting this next round of spending. And a little bit more specifically, the airline industry once again. Okay. But first to some market performance. We have the dollar index trading at 93.94. So getting close once again to that 94 handle. Again, just a short time ago, it was near a 95 handle. So we're still somewhat range bound, but still breaking out to the upside with the dollar index. So we'll see how this transpires. Of course, that could create some nervous feelings within the Federal Reserve because they most definitely do not want this dollar breaking out to the upside. Definitely nowhere near levels it was seen several months ago. So we will continue to monitor. Stocks did decently well for the day, especially the NASDAQ gaining about 1.4% right now on overnight futures trading. However, they are all in the red. The Dow Jones is down about 0.9%. The S&P 500 is down 0.7%. And the NASDAQ 100 is down about 0.6%. Cash trade in Japan is also down about 0.9%. And last night, even during the podcast, I didn't get to it, but cash trade in Japan, there was a glitch. There was a technical glitch, ladies and gentlemen, in the cash trade in Japan. That means somebody was probably trying to sell stocks, and you're just not allowed to do that. It's against the law. So somebody didn't know what to do. Johnson, somebody's trying to sell stocks. What do we do? What do we do? Technical glitch, shut it down. So we'll see how this continues to play out. Across the pond in Europe, mixed bag, but mostly up. Cash trade in Australia right now also trading in the red, down about 0.6%. On the commodity front, oil took a nice hit today. WTI is trading at $38.26 a barrel. Brent is at $40.47. Natural gas at $2.48. Gold and silver both had a decent day, but right now, overnight, pulling back both. Gold spot is at $1,892 an ounce. Silver is at $23.59 an ounce. Uncle Sam's 10-year junk note, spot 66. Still tightly range bound. So again, you have that breakdown a little bit if people want to claim that there is a flight to safety for whatever reason. I don't know whether there'd be a flight to safety. We're supposedly in a miraculous, super-duper V-shaped recovery. But nonetheless, these are the headlines that we were going to see and people talk about. So if you want to put that out there, that this is a safe haven play to the U.S. dollar, which is why we're seeing strength in the U.S. dollar, if you will, then we should be seeing lower yields. But we're not. They are still very, very tightly range-bound. Because if you're going to fly into the U.S. dollar for safety, then one would also think that you're going to fly into U.S. Treasuries across the yield curve, but definitely further out. So we should see some movement in the 10-year. Well, we're not. So what's going on here? What's the mixed message that we are seeing? Is there a breakdown? I think so. I think this is the calm before the storm. Again, the MOVE index, which is the volatility index for the bond market, had an all-time low the other day. So to me, again, this is just simply the calm before the storm. The Treasury market, the bond market, dwarfs the stock market by just an order of magnitude. And if the bond market blows up, that's all she wrote. It's game, set, match. Federal Reserve understands this, but there's only so much more that they can potentially do, which is why Jay Powell and company at the Federal Reserve and all his minions and lackeys have been coming out en masse over the past couple of weeks, basically begging on bended knee, Congress, please do something more. Because there's only so much we can do from a monetary standpoint, so you got to get some more fiscal stimulus out into the system, and we will be happy to oblige, and we will be happy to facilitate, and we will be happy to buy all of these junk bonds that you are going to issue. Because we have this fancy thing called the Banana Republic printing press. And it's already full bore, but we're really ready to turn it into hyper overdrive for you. All you have to do is pass another bill to spend another $2 trillion that we don't have. But that's why you're going to call us up, because we got this fancy printing press over here, and we're just going to give you the money so you can give it to whoever you want. And of course, we know who gets the bulk of the money, and it's not you. Ladies and gentlemen, understand the system. Please, understand the system. Understand the game. So here's the Department of Labor, initial jobless claims, but of course, at the very top, we have a technical note. So allow me to read this. In response to recommendations resulting from an internal review of state operations, the state of California has announced a 2-week pause in its processing of initial claims for unemployment insurance benefits. The state will use this time to reduce its claims processing backlog and implement fraud prevention technology. Recognizing that the pause will likely result in significant week-to-week swings in initial claims for California and the nation, unrelated to any changes in economic conditions, California's initial claims, published in the UI claims news release, will reflect the level reported during the last week prior to the pause. Upon completion of the pause and the post-pause processing, the state will submit revised reports to reflect claims in the week during which they were filed. Now, I made note of this a handful of days ago, but here it is in black and white. Unbelievable, isn't it? I mean, it's not like California is the state of Rhode Island, no offense to Rhode Island, but California is a pretty big deal. A pretty big deal. A 2-week pause. So what's this mean? I mean, how distorted now is the jobs picture going to be? And this is to get through the backlog. Well, if things don't get better, how is their backlog going to get any better? Are they going to have to issue another memorandum? Another statement saying, oh, well, we got to wait another 2 weeks. We got to pause it because this super-duper V-shaped recovery just ain't so, Joe. This is a joke. But here we go. It's going to be more distorted data. Just when we thought we might be getting out of it finally. Oh, no. Back down we go. So let's get to the real jazz. For the week ending September 26, 837,000 Americans filed for initial claims. 837 is the number, slightly below market expectations, which I think was about 850,000, but still heartbreaking. This is nothing to write home about. This is not a good number by any stretch of the imagination, and to me is just, again, further proof that this is not a super V-shaped recovery in the least. The prior week, ending September 19th, was revised higher by 3,000, now standing at 873,000 for the prior week. For the week ending September 19th, continuing jobless claims decreased from the prior week of 980,000, now standing at 11,767,000. So that's what we want to see. We want to see people getting back to work, continuing claims, but we know through the Nobody Cares Act that other programs have been created, and that's where a lot of the increase over the past few weeks has been experienced. So we will get, obviously, to that right now. When we add it all up, for persons claiming UI benefits in all programs, again, this is a 2-week lag, so this will be for the week ending September 12th. This takes into consideration regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency UC, unemployment compensation, extended benefits, state additional benefits, and work share gives us a grand total of 26,529,810. So let's call it 26,500,000. That is a week-over-week increase of some 485,000. The bulk of that increase took place in the children of the Nobody Cares Act pandemic unemployment assistance and pandemic emergency UC programs. For the PUA, it was an increase of 317,000. For the PEUC, it was an increase of 197,000 from the week prior. And of course, recall during last week's discussion, which was actually, I think I did that on Sunday because I was off last Thursday and Friday, we saw a decrease of some 3 million. I think it was over 3 million, taking us from 29 million down to 26. And that was somewhat of a head scratcher for us here at the Capital News because coincidentally, I mean, that's how many jobs were added over the prior 2 weeks. And then just like that, drop of the hat, all of them were given back. So again, these are just distortionary effects. This, unfortunately, is par for the course. This is what happens when the government has to do something. And this is what happens. This is why I do these podcasts. This is why I have Thursday set aside for this data dump. I hope the audience gets some value out of it. I get some value out of it, so I hope I pass that along to the audience because I do like doing these ones on Thursdays. And then tomorrow is going to obviously be the first Friday of the month, so we should be getting the jobs report, the official jobs report. Oh boy, well, what do you think that's going to be? 20 million jobs created? I mean, because it's going to be the last official jobs report that we get prior to the election. So you know it's going to be fantastic. It just has to be. Because it has to fit the narrative of a super-duper V-shaped recovery. Now, of course, we'll continue to get initial jobless claims throughout the month of October, but this is going to be the final official jobs report, and that, of course, will be for the month of September, coming out tomorrow, and we will do what we have been doing since April, reading that jobs report in its entirety on tomorrow's podcast. Looking under the hood, what we want to pay attention to, obviously, is how is the picture looking for those permanent job losers. And unfortunately, that number has been getting bigger and bigger every month. But that's no surprise to the Capital News. It should be no surprise to this audience either, unfortunately. And that number stands at about 3.5 million. And we have not been at such a high number since about 2013 when we were still coming off the great financial crisis. That's just how she goes. So that's the initial claims figures. Again, pay attention to that California statement. That's big news. Like I said, California standalone is one of the largest economies in the world. Just if you took California by itself would be one of the largest economies on the planet. All right. So For them to put a pause on for a couple weeks, that's big. That's big. And that's to get through the backlog. And again, if the backlog continues to get bigger because there isn't a demand for labor in the state of California, let alone the rest of the country, but let's just focus on California, then what are they going to do? I again pose that question. Looking at the Federal Reserve's balance sheet, we are now standing at $7.056 trillion. This is a decrease from the week prior of about $37 billion or so. $37 billion decrease in the Federal Reserve's balance sheet, but still near an all-time high. Worry not. Worry not. Don't worry your pretty little heads. The Federal Reserve will jack this number up in the not-too-distant future because I'm sure Nancy and Mnuchin will be signing something in the not-too-distant future when it comes to another spending program. When we look at M2 money stock, another week-over-week increase, making a new all-time high, sitting at $18.720 trillion, an increase of about $20 billion week over week. But this does lag. This is for the week of September 21st. But there you have it. Now, when we take a look at another spending bill, how goes it? Well, this is an article here. We have hopes for a bailout still alive as U.S. airlines lay off 32,000. Or do they? American Airlines Group and United Airlines will start laying off thousands of employees as scheduled, spurning Treasury Secretary Steven Mnuchin's appeal for a delay as he negotiates with Congress over an economic relief plan that includes payroll support for U.S. carriers. Both airlines vowed to reverse the cuts if the government agrees to provide additional aid in the next few days. Extortion much, according to memos to workers issued late Wednesday by the carriers. The furloughs totaled 19,000 at American and about 13,000 at United. The job cuts ramp up the pressure on Mnuchin and House Speaker Nancy Pelosi as they haggle over an economic relief plan, with Democrats calling for about $2.2 trillion and the White House pushing for about $1.6 trillion. What magical number is right between that, ladies and gentlemen? That's right. Our number here, $1.9 trillion, will be the happy medium, an increase and decrease in both of their plans, respectively, of $3 billion. Or $300 billion, my God. White House Chief of Staff Mark Meadows said late Wednesday that the most recent proposal includes, wait for it, $20 billion for airlines as the industry contends with an unprecedented collapse in travel demand caused by the coronavirus pandemic. But their cash position on their balance sheet is not so much devastated as it otherwise might have been had the executives of these fine firms kept it as a cushion instead of using it to financially engineer their stock prices higher with share buybacks. Seemingly that is always lost from the discussion. $20 billion after we gave them $25 billion earlier this year. So we know the numbers, right? They gave them to us. 32,000 jobs. This is basic arithmetic, okay? 32,000 jobs, $20 billion. Let's do it. $20 billion divided by 32,000 jobs. $625,000 per job. I don't know your livelihoods, ladies and gentlemen. I'm sure many of you are quite successful. Others may just want a little more excitement. Maybe you should be an airline pilot, a stewardess, a baggage handler, because evidently, according to the government, they make $625,000. They really take us for suckers. They really do. Because I can assure you, the CFOs and the COOs and the CEOs of these airline companies, they know how to do basic arithmetic. And they were like, if you give us $20 billion, we can save 32,000 jobs. I think, Johnson, yes, I know you're busy taking care of that technical glitch over there in Japan, but Johnson, 625,000 is per job. Can we swing it? I think we can. They really take us for suckers. And this is coming out of the White House, okay? So for all, again, my friendly fiscal conservatives, you don't have a leg to stand on. You need to sit down and shut your mouth. Okay, I'm sick of all of these big government policies here, picking winners and losers. This is what this is. $20 billion to save 32,000 jobs, $625,000 a job. How long is this going to last? Until they're back again. Because we gave them $25 billion before. Now we're at 20. $15 billion? Come March, come April, come May, come June. And then we'll see what happens next. How much more? We don't have the money. They have it. These are publicly traded companies. They can issue that stock back, all that fancy stock that they took off, they can put it back into the market. Well, the share prices are going to take a hit. I don't give a damn. That's their problem. That's their mismanagement. Maybe you should fire the CEOs. Maybe you should have a vote of the shareholders to overthrow the board members. Because it's the job of the board to be fiduciaries to the shareholders. Oh, everything was great when the party was going and the wine was overflowing. Now it's not. And now it's the responsibility of the American taxpayer, many of whom are unemployed themselves, have mom and pop shops, small businesses, closed up for good. But you couldn't help them out, but you can give these guys a second bailout. This is occurring right in front of us. How are people not paying attention? How can people not connect the dots to the system, to what's going on? And people really think there's a difference between a Democrat and a Republican. It just fascinates me. It fascinates me, truly, with all of this stuff that's going on. Wear a mask, don't wear a mask. Oh, that really differentiates you. Eat a bean, don't eat a bean. That really differentiates you between a Republican and a Democrat. This is all the stuff. This is your money. And then we can go into the whole thing of your constitutional rights and everything else with a whole host of other issues, but that's not for today's program. It just boggles my mind every single day, and people think it makes a difference. You turn on Fox News, CNN, MSNBC, you see the talking heads, the talking points. Give me a break. None of this stuff is barely ever mentioned. It's basic math. $625,000 a job. You know how many small businesses you could have kept afloat with that? They're gone. They're gone, and they ain't coming back. And how many more are unfortunately waiting in the wings because they're just, grabbing on and trying to squeeze as much juice as they possibly can from some of the PPP loan money that they may have received. How much longer is that going to last? And not too much longer, we know, survey after survey. Most of it was exhausted in August. We know what's going on here. And now we got another bailout coming down the pike, potentially for the airlines. What about the restaurant industry? Aren't they important? The hotel industry, the cruise line industry? I mean, who gets the pick? This is the problem with these bailouts. They pick the winners and the losers. This is a power grab. This is consolidation. This is a tragedy. But this is par for the course again. So to bail out or not to bail out, it's going to be to bail out because that's what they do. That's what we do here in the Banana Republic of the United States of America. But not you, not your small business. You're not essential. Even though you might sell the same goods or offer the same services as some bigger stores, they can stay open because they're essential. Because they line the coffers of politicians in their political campaigns. Small businesses don't. So you're non-essential. You get it? Right in front of you. You have another option. There are third parties out there. You have the Libertarian Party, which I hope this audience in this country takes a hard and serious look at. Again, turning it a little bit political, but what we witnessed the other evening was a national disgrace and a national embarrassment. If there was ever a time and place for this country to shake itself out of this haze that we find ourselves in, it was then. And I said, my God, there has to be something else. There has to be somebody else. This is the best that we can do. 330 million Americans, and these two idiots are the best we can come up with? Surely there has to be somebody else. There is, but, she's not going to be able to get on the stage, even though she's on all 50 ballots. Joe Jorgensen. Nope, can't be up there. Because you only get two choices. Coke and Pepsi, red or blue, Republican, Democrat. And you just keep getting screwed and screwed again. And it's just, we might get screwed a little bit less with the Republicans, or you think it might be a little bit less, a little bit better, a little bit nicer with the Democrats, and that's all it is. I am begging you to wake up and to leave these parties. It is the most peaceful thing that we can do as citizens in a peaceful revolution that this country most desperately needs, and it is plastered in front of us every day as to why. One reason after the next. Change your registration. Become a libertarian, I would argue for that. Constitutionalist, independent, unaffiliated. And as I always like to say, tongue-in-cheek, the Mickey Mouse Club. Write Mickey Mouse in. For the presidency. You get to write in. I wonder how many Mickey Mouse votes will actually be written in. Probably quite a few. The question is, somebody might count that as a vote for Donald Trump or a vote for Joe Biden. Because, well, my God, that's how they acted. No disrespect to Mickey Mouse. So, ladies and gentlemen, there we have it. Initial jobless claims. Pay attention to that California statement. Of course, we addressed that earlier. That's something to be mindful of. Further distortionary effect as we're trying to make our way through this maze of data and monetary and fiscal policies. It's quite difficult, but, they're never going to make it easy for us. But we'll continue to do what we do. Tomorrow, again, the jobs report. It will be the last before the election on November 3rd, so that is going to be highly watched and anticipated. And, of course, we will look under the hood, as we always do, to give you the real picture. Do not fall for the headlines. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.